Jenny, Pit. Mr. Bill, SPC stock. Okay, we'll take a look at it. Captain CRNA. Okay, that's a weird one, but okay. SPCE, we'll take a look at that one. Mr. Tim, what's going on? All right, so you guys getting down here? All right, so let's do it. SPCE. SPCE. Well, that's just jumping right on in now, aren't we? Okay, basically, my name is James. Good evening, everyone. It is 9 p.m. January 1st, 2026. This is my very first show of the year. Yay! All righty, so let's see what we're going to do. That being said, we're looking at a lot of interesting things. Now, I invest specifically for a simple, safe, predictable, consistent 1% per week. I'm not looking for big, rapid growth, and I'm not looking to buy something and watch it grow higher and higher. No, I'm not looking for that. And I'm definitely not looking at those ETFs that the numbers just don't work. Okay? Dr. Dev, thank you for that. So that being said, my main goal is a simple, safe, predictable, consistent 1% per week using pre-qualified dividend stocks. Now, when I say pre-qualified dividend stocks, that means I don't want to look at just anything. I want to look at companies that have been consistently profitable for at least 2 decades. That's 20 years. Hey, Alex is in the house. Don, Jeff, what's going on? Keith, how you doing? So 2 decades is not a lot to ask from, considering the stock market's been around for 400 years. 400 years is a lot of time. Mr. Bill, we're looking at SPCE right now. Bill, you're on both channels. That's funny. Anyway, so that being said, okay, I like the Dividend Kings. 5 decades of increased profits. The Dividend Aristocrats. 25 years of increased profits. And then you have the Dividend Champions. 25 years of increased profits, but the rules are a little bit different. A lot more Dividend Champions than there are Dividend Aristocrats. Needless to say, list number 4. I like the Dividend Dividend Contenders. 10 to 24 years of increased profits. Now, any one of these categories is going to give you a good list of stocks. And wait a minute, just for the fun of it, let's just throw in Warren Buffett's list. So that's 5 lists right there. You can go to Google or whatever search engine you use and enter in Dividend Kings list 2026. Dividend Aristocrats list 2026. And guess what? You will get the list of the updated list of all the companies that have consistently increased their profits year after year after year. Those are the companies that I like. Consistently profitable and weekly options. I love weekly options. In, out, done. Jacques, how are you today? Who do we have down here? We got Eaton or Elon. Wow, is this my favorite trade view? Okay. Deb, how you doing? Beast, what's going on? All righty. Okay, never mind. Dr. Dev, please take YouTube screen. Yeah, that one, thank you. All right, Mr. Bill, FinViz is a pretty sweet too. Yes, Mr. Bill, we use FinViz once a week to take a look at all the new stocks that are popping up. Dev, AT&T was a Dividend Aristocrats until 2022 when it lost the dividend streak. Oh, that's a bummer. Now, we still look at it because, we do make exceptions because AT&T, they sucked up Marbell, so they're like 100 years old. Why not? Eric, how are you today? Alrighty. Got some more people over here. Enzo, what's going on? Costa Nostra, how are you doing, brother? Rob, I didn't know that 2 decades was 20 years. Oh, no, please. No. Tell me you're not serious. Wow. All right. Anyway, been waiting for my favorite show to come on. All right. Does that mean 5 decades is 50 years? Yes, exactly, Rob. I fear for the future of our country. Okay, Simon Quintero. ¿Qué pasa, amigo? ¿Cómo está? I left my number on the message you can call. One day, how are you today? Thoughts on Newmont? NEU? Let's take a look at NEU. Okay, hold on, NEU. Anyway, we're looking at SPCE first. Let's sit tight for a bit. We're going to take a look at Newmont in a minute, all right? So, one day, sit tight. What I'm looking at first, this is the 1 year chart. I'm looking for 5 things, and they stand out like a sore thumb. Are you ready? Number 1, where is the high of the year? Right there. Number 2, what is the low of the year? That's right there. Number 3, where was it a year ago? 4, where is it now? And 5, that takes the longest. You just take the row. Watch this. Up, down, blah, 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 blah. Okay. Basically, it just kind of went sideways. That's about it. But that gives me a good idea of what's happening over the last year and where it looks like it hypothetically should be going for the next year. So it looks like, down, up, down, up. So what's going on here? Up, down, now up. Okay, fine. Let's zoom into that a little bit more so we can get a clearer picture. So I go from the 1 year chart, and then I look in the 90-day chart, which is the last 3 months. Then I start the rule of 5 all over again. The high, the low, where was it, where is it? I'm looking for momentum, and I'm looking for patterns. Patterns are easier to see. This one, it's not, huge, but it is in a very slightly downward pattern, but that's not the only pattern I'm looking for. See, up, down, up, down, up, down, up. It's getting tighter and tighter, the ups and the downs, the highs and the lows. Okay, they're getting tighter and tighter and tighter until they're like really small right there. But that's one thing. It's just a visual observation. Next, the last 30 days. Now, the last 30 days, it's not 100% accurate, but it gives me a rough idea of where does it look like it's going next. What is this thing? Steve, what's happening? Did you ever check out that asscanner.com? They added covered call finding. No, I have not. Send me a text on that one or an email. I'll go take a look at it. Happy New Year. You too. Really? Thank you for that, Big Bob, whatever your name is. I'm sure I'll let my 4 children, my ex-wives, and my grandson know that you feel that way. Hey, more power to you. All right, anyway, besides the point. It looks like she's going down a little bit, but right here, okay, she went up, she pulled back, and back up again. It looks like she's just going to go sideways for a little bit, but, it's only a $3 stock, so what's the big deal? I mean, think about it. If I'm going to do this one, slide this over a little bit. I probably should have looked at the price first before I decided to spend all this time on it. Okay, so currently it's 321. So the closest strike price will be either the 3 or the 350. So the 3 is paying 20, and the 350 is paying 6. I take the 350 because you get the difference between that, and then you get this right here, which is very short of 2%. Now, I'm looking for a 1% every single week. Remember, simple, safe, predictable, consistent 1% per week. Yesterday, you talked about buying APLD tomorrow because the premium earnings are next week. Yeah, and tomorrow morning, I will be buying APLD. I'm not sure what the question is, because it should have been more of a statement, not a question. All right, so let's take a look at it. Does it make sense? And do you like SPCE or whoever it is? Does earnings change that? No. See, Richard, earnings, I've seen positive earnings where stocks drop. And I've also seen negative earnings and stocks go up. So earnings, in my experience, the earnings report really doesn't change. I mean, it's not guaranteed. It's not guaranteed to change the direction of the stocks. Sometimes it does, sometimes it doesn't. So how are you supposed to interpret that? You know, great earnings, but the stock price went down. Oh, those earnings are terrible. But wait a minute, the stock price went up. I've seen it already. So does it have an effect? Sometimes yes, sometimes no. Now, certain companies, when they have their earnings, I stay away from because I have an opinion that the market makers or some market makers overreact to the information. Okay? There's a few of them out there. You know, if you get a bad report, it tanks, and it tanks big. And if a good report, it shoots up, and it shoots up big. So this one, APLD, I'm not that dissuade of possibilities such as that. But I'll do a little bit more research on it, and more than likely, I will do a safer trade. Because something paying the dividends that we looked at, not the dividends, sorry, the premiums that we looked at on the APLD yesterday were so big, it's like, okay, fine. I could pull it back and go like 3 strikes in the money and still get a great option premium and be safer. Because the further in, all right, the line right here, okay, between the black and the purple and the black and the purple, okay, the line itself is called at the money, ATM. Okay, it's where all the action is happening. It's where the current price is. Now, ITM, that's the purple. That's in the money. That's the safest one. Okay? Now, the black is out of the money. Okay? Which means there's not much value. The stock has to move in order for you to make a profit. So, in the money, you're already there. You're already in the money. So, it doesn't really matter what happens with the stock. It can stay exactly where it is, and the profit is already there. Okay? So, I most likely do an in the money one on APLD. Premiums are extreme because of the earnings. Yeah, I'm well aware of that. But remember rule number 1, Richard. Never buy something you don't want to own long term. If I was on the fence about APLD, it's like, do I really want it? Is it one of those? No. If you don't want to own the stock long term, regardless if the price stays where it is, drops to the floor, shoots to the moon, if you want to buy it and you want to own it, then do that. But if you don't like it or if you're questionable, don't buy it. Never buy something you don't want to hold on to long term. Johnny, just showing up. You're new here. How you doing, Johnny? So never buy something you don't want to hold long term. Annie, how are you doing? Can you show me your actual TikTok? I think someone is pretending to be you. Now, Annie, I'm going to apologize right now. Last I checked, there was 37 people pretending to be me. But Andy, what I always say is, if you really want to talk to me, DM me your phone number and I will personally call you. Okay? I don't email, I don't text, I don't WhatsApp, I don't what's that other one? Telegram. I don't do any of that stuff. If you want to talk to me, you come to my website, drop your phone number, and I personally, I won't pass the buck. Me personally will give you a call back. Okay? But you're on the10MinuteTrader.com, which is my website. And also, the second TikTok is Dividend Stock Talk. Okay? But Andy, if you get an email saying, oh, sorry, I couldn't call. No, that's not me. I don't email. I don't text. Okay? I pick up the phone, and I love talking to people. I do. I love helping out people. That's one of the reasons why I'm here. Okay, I think it's one of the biggest sins you could perform, taking all what you learned throughout your life to the grave. So, I am now on the journey for the next 10 to 20 years to blurt out everything I've learned over the last 60. Not all of it, but only the good stuff. I learned some crappy stuff, but I'm not going to share that. Anyway, let's do this one. Only because it looks interesting. And also you get an idea of how it works, the mechanics. Baba Sheep. Okay. Richard, can you explain buying a covered call in the money? Maybe an example of benefit. All right, Richard, tell you what we're going to do. Sit tight. We're going to finish up SPCE, and then we'll actually take a look at APLD, and we'll take a look at a bunch of different dates and a bunch of different strike prices. So it could be a good exercise, and I'm going to record it and have it available in my library. All right, as an example. So SPCE, the current price right now is the 321. So we're going to do the 350. So let's see what the 350 looks like. The 350 looks like that. Okay, we're going to do just one contract so you get a better idea of what one costs. That way you can check out your own budget and think, okay, well, if it costs this, if one costs this much, I can get me 20. I can get me 32. I can get me 7. I can get me 3. Okay, we're all different. We all have a different path. We're all beginning. We're all ending at a different space and time. Do not compare yourself to anyone else. Okay, I try to make this as simple as possible. Everybody should be able to understand 1%. Because if you have $1, 1% is a penny. Okay, 1 penny is 1% of $1. It's that simple. So if you have $100,000, 1% is $1,000. If you got 52,623, well, guess what? 1% of that, you just move the decimal point over 2 places. I was going to fall for that one. All right, so here's the trade right here, the one that we're explaining at the moment. Buy one covered call, SPCE, 9 January. That's not tomorrow. That's next Friday. Lone Wolf. I'm still trying to learn. Holy cow, dude. I feel really bad. I do. You and I are going to have to talk because I'm going to have to make this easier because I created it for my 9-year-old daughter and you're still having issues. And I must be doing something wrong. Anyway, what do we have here? Clueless when it comes to this stuff. Just sit back, relax, and just pay attention. When you own a share of stock in a company, you actually own a part of that company. Absolutely. Okay, so let's keep on going. All right. One covered call, SPCE, 9 January. That's next Friday. The $3.50 call option. Now, I'm not buying it. I am selling it. I don't buy options. I sell them. 80% of all options expire worthless, so I don't want to be a buyer. Okay? I want to be on the 80% side, which is the sellers. Okay? Now, I don't make as much money as some of those guys, but I'm not looking for a lot of money. I'm looking for 1%, and this is easy. My 9-year-old got it in 15 minutes. Okay? All right. Here's the profit, $35.50 per contract. Well, each contract is $315. That's it. $315 for one contract on SPCE. So, to find out the rate of return, that's just a simple math problem. And we're going to need the calculator for that, big and bold so everybody can see this. Here it is. Okay, first thing we want to do is take the profit. Max profit, $35.50 for one contract. Remember, one contract. So if you get 10 or 15 contracts, it's that number times whatever amount of contracts you have. Trying to make it simple, easy to comprehend. Okay, so $35.50 is the profit. And I'm going to divide that by the investment, which is, are you ready? Cost of trade, including commissions and fees, $315.16. Okay. That is for just one contract. Okay, so 2 contracts, multiplied by 2, 10, so on and so forth. Anyway, 16. Oh, wait a minute. 16. There we go. Equals a grand total of, that can't be right. It can't be 11%. Let me go through that math again because 11%? Oh, wait a second. All right, clear that. Profit, $35.50. Not many EX dividend dates out yet for companies in the dividend aristocrats, champions, kings, and contenders. I've put together a spreadsheet showing this, plus have weekly options. Hey, Maine, that's awesome. DM me that or email me that. That sounds great. Oh, anyway, so let's get back to what we're doing. $35.50. Profit. Investment. $315. Divided by $315.16. It is 11%. Holy shit. So my math was correct. So apparently, who came up with this one? STE, whatever the heck this thing is. What is it? SPCE. Okay. Virgin Galactic. Oh, imagine that. Okay, so one contract of Virgin Galactic, okay? One contract, Virgin Galactic, well, is $315 because you have to buy 100 shares. Okay, so you buy 100 shares, which is equal to one contract. Okay, 500 shares, 5 contracts. 1,000 shares, 10 contracts. So it's 100 shares for one contract, and that is $315 for Virgin Galactic. I'm writing that one down. All right, I got a couple $100 to throw away. Let's see how it works. Anyway, write that one down. Yeah, write that one down. SPCE. SPCE 11. That can't be right. Well, anyway, I'm going to give it a try anyway. But before I do that, I'm going to go in and take a look at a few other things. What's the book value? What's the dividends look like? What are the increasing dividends? And does it even have it? I don't know. I've never invested in them before. But 11% for 1 week, that gets my interest. Anyway. Righty. So let's get rid of this one. Now, let's do something interesting we haven't done in a while. All right? It wasn't Annie, it was Richard. Okay, Richard, can you explain buying a covered call in the money game? Okay, Richard wants to know, he wants me to explain the difference of doing a excuse me, my God, this getting old stuff is no fun. Body just does weird things. Okay, so which one are we looking at? APLD. Okay, APLD. APLD. Here we go. Alrighty. Now, first thing I always want to do before I do anything, put it in the chart. And it's going to take me 3 to 4 seconds to pick it apart, so to speak. Is it qualify or does it not? Here we go. You ready? High, low, where was it? Where is it? What is the motion? Okay. It looks okay. We got a good idea where it's going. Here it was last year. She dropped on the bottom, just like everything else in April. Shoots up. There's your top. Now you get your profit taking. And here you have your rebound. This is where you get into those Fibonacci numbers, remember? She shoots up. There's your pullback. And there's your recovery. And there's your other. And it slowly slows down. It goes like a pennant. It's smaller and smaller. So we're right here right now, $24.52. That's the current price, $24.52. So if I'm buying it at $24.52, okay, we're going to look at different options. Okay? I'm going to look at the 24, the 24.50, the 25, and then the 25.50. Okay, so in the money, at the money, out of the money. Okay, 2 strikes in the money, 1 strike at the money, and 1 strike out of the money. It's going to be the exact same stock with the exact same numbers. This way you'll get an idea of what do they look like. And I will explain what ifs. which would mean if the stock stayed exactly where it is right now, 24.52, what's going to happen? If the stock drops, so let's say 22, what's most likely to happen? If the stock jumps up to 26, what should happen? Okay, but before we do all that, you got to get in your mind first, what are you doing? What and why? What are you doing specifically? What is your goal? What is your outcome? What is your desire from doing this? Okay, don't get me wrong. A 50% return on every month, every year, it's awesome. But what is your long-term goal? Are you going to continue doing this over and over and over again, or is just one of those things like, oh yeah, that's interesting. Why the hell not? Think about it, because when you get to my age, on this side of the fence, when you're retired, okay, I could go back to work. I have no desire to. Okay, my first job was in 1974, Old Man Simmons Farm. I was still in elementary school when I had my first job. That was the 70s. Anyway, but I retired 3 years ago now. So all the money I've accumulated has to last me for the rest of my life. And here's the kicker, okay? In 3 weeks, I qualify for Social Security. Yay! That whopping $500 a month is really going to be helpful. Yeah, that's it. I qualify for $550 a month. That's it. Can you imagine that? I put in 50 years of work. Now, granted, most of the time I had my own company, which means, anyway, besides the point. But I've been working here, living here, okay? I put my 50 years in of work because I'm 62. My first job, I was like 11, 12 years old. So I'm getting $550. Do you know how much, any idea how much it pisses me off to see these illegal aliens come in and they get more money than I do? And I put in over 50 years. Anyway, don't get me started. So anyway, here we go. First one we're going to do is going to be, let's get rid of this because we know what we're doing. Oh, wait a second. Let me finish explaining that. First thing I want to do, 1 year chart, high, low, was, is, what's it doing? Then I want to go to the 90-day chart, the last 90 days, which is the last 3 months, and do the exact same thing. Top, bottom, was, is. It doesn't take that long to get a good idea of where does it look like it's going. Okay, it looks like it's going to the up. Well, overall down, but still, now at this moment it's going up. Great, well let's zoom in a little tighter into the 30-day chart, because the last 30-day chart will give me a better idea of where I think this thing's going to be by next Friday. So the last 30 is right there. And then same thing, every chart's always the same. Always the same. The high and the low, where is it? Up, down, up, down, up. Okay? That's what it looks like it's doing the last 30 days. So it's coming from the top down here, sliding down. Now she's pivoting there and going back up again. Well, let's take a look. Get rid of that. First thing I want to do is change it to covered call. Simple, safe trade. First one we're going to do is, I miss Maverick. Is it easy to lose money? Absolutely it's easy to lose money. My next question, yes, unless you practice and I suggest paper trading first. Yep, me too. No, if you follow and implement the strategy, it wins. Yeah, it does. Okay, anyway. 24.52. First one we're going to do is going to be the 24. Let's do the 24 first. That is 2 strikes in the money. To give you an idea what the rate of return is. And then we'll show you if the stock goes up, this is what it should do. If the stock goes down, this. Okay, anyway, it's a good one to do an example on. Okay, so the 24, let's do it. 24, yo, let's kick it. All right, here we go. One contract. Now we're going to do one contract to keep everything the same. At the market, here we go. And Here's what it sounds like. Buy one, covered call, APLD. 9 January 26th, that's next Friday. The 24 call option, this is the first one we're going to do. The 24 call option. The profit, 108.50. The investment, 22.92. Okay, so let's check it out. Calculator. Oh, you know what? I'm not going to do the calculator yet. What I'm going to do is I'm going to save this, and then we're going to do the calculations all at the exact same time. All right, so let's do this, do that, and do that. Okay, that's one of them. Next, we're going to do the exact same one, but we're going to do the 24.50. This is going to be a lot quicker this way. Okay, buy one, covered call, APLD, 9 January. Okay, 26, that's next Friday. 24.50 call options, just a little bit different. Okay, here's the profit, 131.50. Here's the investment, 23.19. So we're going to save that one also. Okay, we saved that one too. Now let's do number 3. Here we go. Here we go, number 3. Edit this. Now we're going to do the 24.50. Here we go again. Buy one, covered call, APLD, 9 January 26th. That's next Friday. 24.50. Wait a minute, didn't we just do the 24.50? Wait, the 24, 24.50. This should be the 25. Yeah, we already did this one. All right. 25. Edit. $25. There we go. Here we go. Buy one, covered call, EPLD, 9 January, the 25 call option. 177 is the profit, 23.23 is the investment. Okay? Whoops, let's save that one. And one more. We're going to do the 25.50. All right. Edit. 25.50. Here it is. Buy one, covered call, APLD, 9 January. That's next Friday. The 25.50 call option. Well, here's the profit, 198. The investment, 23.52. We're going to save this one, and then we're going to do the math on all 4 of them and give kind of like examples what could, woulda, coulda, shoulda happen. Okay. Woulda, coulda, shoulda. All right, right there, and there we go. Give it a second. It should be popping up. There it is. Let's take a look. Oh, I hear somebody in there. Hello, hello. Who are we saying hi to? Who's talking in the background? It's always someone talking in the background. Steve! Did you ever check out? No, Steve, I haven't checked it out. Send that to me. Okay, whoops, wrong one. Here we go, right here. There's one of them. There's the other one. There's the third one. There's the fourth one. All right, is that big enough? Gotta love it. All right, calculator. So we're going to do some calculations to figure out what the rate of return is on each one of these 4. All the exact same stock, all the exact same expiration date. The only thing we're changing is doing 2 of them, 2 strikes in the money, 1 strike at the money, and 1 strike out of the money, so you can get a good idea. And then, if the stock goes up, what is it going to look like? If the stock stays the same, what is it going to look like? If the stock drops like a rock, what it's going to look like? Because I get the same questions over again. What happens if the stock drops? The stocks always drop. What happens if the stocks goes up? The stocks always go up. They only go two different directions. They go up or they go down. That's it. All right, let's check this out. APLD, 9 January, 25.50. Here's the profit, 198. The investment, 23.52. So let's figure that out. 198 is the. You guys can't see the. Oh, damn it. All right. Okay, let's do the calculations. 198 divided by, crap. This is where that old crap comes in again. 23.52. Divide 23.52, grand total of 8.4%. Okay. So the 25.50, 8.4. All right, that works. Next. Oh, that's going to be interesting. All right, second, hold on. This will do it just like this. Much better, much better. Same thing, APLD, 9 January, the 25 call option. That is 177 profit, 23.23 is the investment. All right, 177 and 23.23. 177 divided by 23.23 comes to a grand total of 7.6. Not quite 8%, 7.6, not bad. 7.6%. 7.6. Love it. Next. APLD, 9 January 26. Same date, but the 24.50 call option. This is one is at the money. So the first two were in the money. Wait a minute. Yeah, whatever. 24.50. Let's see what this number looks like. So 131 is the profit, 23.19 is the investment. 131, 23.19. 131, 23.19. 131 divide 23.19, grand total of 5.6%. 5.6%. Okay. Last. Now this one is two strikes in the money. The 24. Okay, by one covered call, APLD, 9 January. The 24 call option. This one's two strikes in the money. 108 is the profit. 22.92 is the investment. Okay, well, 108, 2292. Calculator. 108 divide 2292 gives me a grand total of 4.7. Okay, I like 4.7. All right, so let's see if we can do this here. Now, the question was, what's the difference between buying, doing a covered call in the money, at the money, or out of the money? Now, if you understand what that means, let me give you a quick little rundown before we take a look at those numbers. Let's get rid of this. Wrong thing, wrong button. There we go. Okay, back to APLD. What it is? Is this Japanese, English? Yeah, right now I'm seeing 25.25 APLD. Yep, can't follow the screen, is backwards. Sorry about that. Anyway, so here is the stock that we're looking at, APLD. The current price, 24.52. 24.52. The closest strike price, right at the money. Here is at the money, that line right there. Okay? That white line right there at the money, 25.50. Okay, that's after hours. Damn it. Anyway, so the 24.52 right there. So we're looking at the 24.52. We're going to look at the 25, which is at the money, and the 25.50 and the 24. Okay, 2 strikes in the money, 1, 2. 1 strike at the money, that one, and 1 strike out of the money. So we'll take a look at each one, see what if they're different. Couldn't you sell the 21 on APLD and still get a good return and make it a much safer trade? Alan, absolutely, but I don't want to do an example for each and every single one of these. I'm just giving an example for these 4 right here. Okay? The 24, 24.50, 25, 25.50. That's the actual one contract right now, right where it is. And let's take a look at the ROIs. As the further you go down, the 22s, the 21s, the 20s, your profit decreases, but safety increases. So you got to figure out what the balance is. Okay, do I want safety or do I want profitability? Well, my choice is safety. Okay, I don't want to have to go back to work. Something about saying, good afternoon, welcome to Walmart. Will it be paper or plastic? Did you find everything you needed? Aisle 17? Yeah, way down the end? Yeah, no, that's not me. Sorry, I've worked over 50 years. Alan, W, and I'm just trying to make it a safer trade and make the 1% like you teach. Thank you, Alan. No, you're 100% right, Alan. Okay? Now, me, more than likely, I'm going to do 2 strikes in. That's what I'm going to do tomorrow. 2 strikes in because it's a safer trade. I mean, I can go 4 strikes in and be even safer. But, you know, like what's wrong with APLD? All right, next. The strike price is what I'm going to sell for. This is the purchase price, strike price. Now, what is the premium I'm going to collect? Well, oh, yeah, I haven't done that in a while. Nice. Cool. Okay. So the strike prices we're looking at, 24, 24.50, 25, 25.50. Well, look at what I'm collecting. The 24 is paying 235. 24.50 is paying 211. The 25 is paying 186. The 25.50 is paying 161. Look, I can go all the way down. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 15 strikes out and still get 1%. That's crazy. Okay? I can go and get all, yeah, the numbers are just crazy. Anyway, so let's take a look. Alrighty, so the 25.50, 8.4%. 25 is 7.6%. The 24.50, 5.6, and the 24, 4.7. So at the money, 7.6. One strike in, 5.6 means that profit's dropping. 2 strikes in the money, 4.7. I got no problem taking 4.7, none whatsoever. 2 strikes in the money, it's a safer trade. And then 1 strike out of the money, 8.4. It always going to come down to a what is right for you. Because what's right for me might not be right for you. So hopefully that answered your question. What is the difference between at the money, in the money, and out of the money options? We did the exact same stock, the exact same trade date, all the same parameters, but the only thing we changed was the strike price. And the strike price, by changing that, dictates what your profit's going to be. All right, so let's get back to where we were and start looking at some other stuff. There we go. Alan, it has no dividends. I didn't say it had dividends, Alan. I was just giving it an example. But you're right, it doesn't. Thank you. All right, Richard, I'm glad you like it. That was a long explanation. So safety's one thing, profitability is another, and you've got to figure out where you stand on your risk factors and how much are you willing to push the envelope to make a little bit extra money. Or do you want safety and have to work a little bit longer? Alan, no, you say no, don't buy stocks that don't have dividends. Yeah, Alan, I'm agreeing with you, Alan. You're 100% right. Mikey G, do you ever sell Friday calls over the weekend or you don't risk it? It's on a case-by-case situation. It always, see, Mikey G, it's always going to depend on what is the picture telling me. Okay, what did I buy it for? What did I sell? Where's it at now? What does it look like it's going? What is the safest play where I'll still get some return? So on Friday, which is tomorrow at 2:30, okay, I do have a live trading group. Okay, we trade live every morning, Monday, Tuesday, Wednesday, Thursday. We take a look at all our accounts, and on Friday we jump in and take a look at how or what should we do so we don't lose any money and still collect a premium every single week. Eric, can you explain how to roll forward and how it helps to be profitable when the stock is down? So yeah, sit tight for a second. Okay, get that one. 6 thoughts. Okay, thoughts on Newmont. Okay, we're going to take a look at Newmont in a little bit. Let me finish up with some of these questions. What is a premium? Oh, no. Please tell me you didn't ask that question. All right, hold on. I'm streaming on 9 different channels, so which means I have questions. So you need to give me a little bit of slack when it comes to answering some of the questions. Smith, yes, you do take in consideration if a stock price goes down, but you're making cash flow right away and when you sell the option. Absolutely. If the stock goes down a little bit, you can lower that or a lot, but then matter, you can hold it and sell the weekly options on it. Oh, absolutely. I agree with all of that. It's like, why am I even here? He can run the whole thing for me. All right, new message. Okay, got that question. I already got that answer. All right. Can you explain how? Okay, I'll explain how to roll forward in a little bit. Right now, we're still looking. I think, didn't we just finish? That was it? The 4 different examples for APLD? If, okay, who said that one? Not Richard. Alan, you didn't let me get to the point where I say, if you like APLD, even though it doesn't have any dividends, if you like it, those are what the numbers look like. So always take a look at, do you like, remember rule 1? Do I like this company? Do I want to hold on to it? Is this a safe place to put my money? Okay? Because I like to look at it as if I am creating new weekly cash paying dividend. Hi, what's going on here? Oh, okay. I have no idea what's going on there. Oh, yeah, Rob. Oh. I left my number, okay, one day, a Newmont. We're going to take a look at Newmont in a minute. All right, now we're going to take a look at Newmont because we just finished up with APLD. If there's no other questions on it, let's move on. Newmont, NEU. Is it NEU or NUE? As Nucor. Uh-oh. Newmont. Uh-oh. What's Newmont? Someone, quick, panic. Newmont. And damn it. NEM. Damn it. I should have known that one. No. Wasn't that quick? You asked my thoughts on Newmont. Not this week. Here's my thoughts. You ready? High. The low, where was it? Where is it? Look at the motion. Okay? That's not a lot of pullback for that much of a gain. The low was last year at 37. And she shoots up to 105. That's close to a 300% increase. Is that right? 35, 100, 200. A little over 200% increase. Anyway, besides the point. Okay? Do you like it? Well, look at right here. Here's the top, and it's pulling back. No, not this week. I mean, if you really like it, okay? Okay, 30 days ago, we're down here. We shoot up. Here's the top. Now she's pulling back. How far back is it going to pull back before it turns around and goes back up again? So I'll put it on the list for next week. Not next week, but the week after. Because this is going to take at least a week or two for it to drop down to a more reasonable spot. NEM, save me, NEM. Anyway. Alejandro, can you goon on stream? I have no idea what that means. Yeah, okay, let's go. La 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 la. All right, what do we have down here? Yes, okay. I made 7.6 last year after taxes. Oh, good for you. All right, what do we have here? Newmont. We did Newmont. No. Next. Demetric Gray. Gobbly Wobbly. 6 thoughts. 6 thoughts. Okay. Isn't that 6 flags? No options. No. How's that one? AMGN. AMGN. Amgen. Okay. Let's take a look. Top. Bottom. Where was it? Where is it? Up, down, up, down, up, down, up, down. I'd wait a little bit. Okay? No sense, fooling around here. Here's your bottom, 312. It shoots up to 330. Now it's having profit taken or correction, pullback, retracement, whatever you want to call it. Me, I see a stock goes from 312, shoots up to 334. Now it's starting to drop. I call that profit taking. You can call it whatever you want. It shoots up, that's profit taking. I'd wait for that to finish somewhere around here before she turns around and goes back up again. That's just my thought. What do I know? SMX. Gobbly wobbly. SMX. We could say, what is SMX? SMX ain't matter. I have no idea what that. Hell no. No options. No, thank you. Oops. La 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 la. Okay, what questions are we at now? SCHD. No, wait a minute. SCHW. Good for weekly options. No. Okay, SCHW. Isn't that Chucky's? I don't know about you, okay? But who came up with Charles Schwab? Okay? It goes from $90 to 102. Now she's pulling back. Maybe next week or the week after. Okay? Because from 90 to 102 is over 10%. You get a 10% increase. Now you got people taking profits off of that 10%. So wait for the profit to be done and over with. SCHW. Okay. One score is 20 years. I have no idea what that means, one score. Mr. Scataholic. Okay. Not sure. If you could invest in one position for 3 to 6 months, which would be the best? Oh, I'd probably do Dell or Intel. They have great premiums. Okay, we just did Newmont. Left you a message. Hey, double A captain, what's going on? Hugo Garcia. Richie Vargas. If anything, it could change them for a day, but not long term. Not quite sure what you mean by that, but alrighty. Richie Vargas wants to know what a premium is. Now, Richie, I'm going to ask you a simple question, okay? You got to be 18 to be here, because I do have age parameters set. Okay, so if you're over the age of 18, then you more than likely have a car. And to have a car, you have to have insurance on it. Well, on insurance, you got to pay a premium, is the amount of money that you pay for certain coverage. Well, believe it or not, a stock option is an insurance policy. So, premium is something that you're paying, or if I'm selling the contract, I'm receiving. Okay, so a premium is something you pay as an insurance policy. So in the stock market, we have calls and puts. They're basically insurance policies. Okay, you need 4 things for an insurance policy: beginning date, ending date, meeting of the minds, that means an agreement between the two, and consideration, money, premium, same thing. Okay, so someone somewhere is going to pay someone to do something by a certain date. That's what the options are. Okay, buy a call, buy a stock at a certain price, buy a certain date, and receive the premium. You're either receiving the premium or you're paying the premium, one or the other. Okay, bid, you're receiving the premium. Ask, you're selling the premium. You're selling, you're paying. Okay, so the ask price, you're paying the premium. That means you're paying for it. Now, as a seller, I sell options, so I collect the bid, collecting the premium. That means someone pays me. That's what a premium is. It's an insurance payment problem. It's insurance payment on a insurance policy. Is this Dr. Fauci? No, it's not. Love T7. Thank you. T-Tom, what's going on? Up, down trader. Premium is the money you earn when you collect a call. Okay. D. Trezick, what's going on? Mystic Dragon, thank you. Saint Samuel, don't forget Newmont. We already did Newmont. Saint Samuel, all right. Mindy, tempted to do a cash secured put on APLD to get in at a lower price than a covered call. Okay, Mindy, the only issue you're going to have there, if you're looking for the big fat premiums from APLD, they're giving it because the earnings reports are coming up. So, earnings reports either scares people away or attracts them to it. If it's a bad quarterly report, the stock could drop. And then it could be a good quarterly report and the stock goes up. But either way, the premiums are heavy this week. Next week, they won't be. They'll probably be back to normal or whatever normal is for APLD. John wants to take a look at PHM. What is Pulte Group? Interesting. Okay. Jamil Khan, good evening to you too, sir. All right, so PHM. Same thing as everything else. Here's the top, the bottom. Where was it? Where is it? Up, down, up, down, up, down. Whoa, now it's coming down. Okay, well, let's zoom in a little closer, get a better look at that. 1 year chart, 3 month chart, 90 days. Let's take a look. 90 days, same thing. The top, the bottom, where was it? Where is it? Up, down, down. But look at how far. We're at 132. Now we're at 132. Now we're at 117. How far down is it going to go before she turns around and goes back up again? So if you really like this stock, why not just keep an eye on it? And then when it hits bottom, turns around, goes back up, then jump in. If, it always comes down to this question, if you like this company. We're at 48. We're going to reboot over here. Okay, so don't go anywhere. Just going to reboot, just for the fun of it. Why not? Come on. Why is that not working? It's not working. There it is. Okay. Okay, so we're going to reboot in this one. And let's go live here. And 2, 3, 1. There it is. 2, 3, 1. There it goes. And here we go. Okay, so we just rebooted that one. Should be good. So, Pulte Group. It's dropping. Why would I want to buy something that's dropping? James Bean, how you doing? That guy, Ricky, Kenny, Dan, Flo. Don't get me wrong, Pulte Group is on the list, but not for this week. I'm going to put it down for next week because it looks like she should find that bottom. Should find that bottom sometime next week. Or it could keep on going down. We'll just keep on, keep on keeping on. All right. Next. How about M? Okay. Luke. Let's take a look at that one. Middlesex Water. Now, Luke, you've been here long enough to know I don't do monthlies. Those don't work for me. Luke, okay? I don't do monthlies. They just don't work for me. Anyway, SoFi. Oh, somebody likes SoFi. Cool beans. Well, now that's inappropriate. Okay, SoFi. Okay, Fuga wants to take a look at SoFi. We looked at this last night. Okay, but it's doing the same thing. Last night, we looked at it. It's doing the same thing today as it did last night. Top, bottom is Okay, up, down, up, down, up, down. It's coming down 26.18. I don't like it buying at, and not only is it coming down, it doesn't have any dividends. Okay, what else we want to take a look at? We could call it a night if you guys don't have anything to take a look at. No? Good morning. Tug, the mighty dog. Oh, take a look at this. Mr. Hudson wants to take a look at Nike. I have no idea why you want to look at SPY. No idea whatsoever. Okay, so here's Nike. Top, bottom, where was it? Where is it? Okay, up, down, up, down, up, down, up. Look at this. This looks a little exciting. Hold on. Let's zoom in and see what it looks like. Big brandy wine. All right, last 90 days, the last 3 months. Okay, here's the top. Here's the bottom. Look at the gap. It's almost filled right there. It doesn't have much more to go. But look from here to there. Let's zoom in a little closer. The last 90 days. No, wait a minute. That wasn't 90 days. All right, the last 30 days. Here's the last 30 days. Now, right there, that's a huge gap. That is going to fill eventually. Look, from here to there, it's got a little bit left to go to fill this big, huge gap. So maybe it will, maybe it won't. Well, not that far away, but 57 to 64 is $7. Okay, that's over what, 12%? 13% between here and here. How much further can it go out before people start selling and taking profits? That's something to take into consideration if you like Nike. Now, I already have it, but it's, what else we got there? Love the channel, thank you. Big Brain Long Term. Scarlet, IWM, what is that? Anyway, so, 63.71, the 64s are going for 95. Let's roll this one out and see what it looks like, because it might be a good idea. Covered stock, the 64. Yeah, the 64 right there. And here is what it looks like. By one covered call of Nike. 9 January 64 means the option is going to expire next Friday. So whoever buys it from me, remember, I'm buying the stock and I'm selling the option to someone else, giving them the right to buy it from me for the same price I just paid for it. I'm not looking for the stock to go up. I really don't care. I want it to be a profitable company and I want to have weekly options so that I can get cash flow from it when it's bouncing from a 30-day top, 30-day high, to a 30-day high, 30-day bottom, then going back up again. Because that's what stocks do. That's the position I want to be in, and I want to collect the premium. So, the $64 call option, $100 is the profit, $6,300 is the investment. Definitely doesn't sound as good as the other one we looked at, but let's take a look. Profit, $100 and 50 cents. I'm going to divide that by the investment, $6,300. Gives me a total of 1.6% return. Well, I could do that for 1.6%, and it's Nike. So there's that question again. Does it make sense? Do I like Nike? Do I like Nike at this price? Does this sound like something that I can do? Is my money safe? Okay, remember, never buy something you don't want to hold on to long term. So I got to play swappy changey with these things because things getting a little low. There we go. Alrighty. So, what else are we looking at? 1.59 for Nike. There it is right there. Nike, 9 January, that's next Friday. The $64 call option. $100 is the profit. The investment is $6,300. That's still over 1.5% if you like Nike. Well, let's see what else we can come up with. Oh my God, you hear my voice cracking? That sounds terrible. All right, let's get out of this one. What do we want to look at next? Rare. More like option selling, John. Do you do option trading, option selling? Would like to take A from start classes with James. Learn A to Z. Hey, blessed, why not? DM me your number, I'll give you a buzz. He does not consider monthly options. Rare is only monthlies. Thank you, Up Down. Don't do monthlies. The numbers just don't work in my favor. So if it doesn't work in my favor, why would I be doing it? Just doesn't make any sense. EJ, oh, RJ, see you tomorrow. Oh, was that Big Brain? Oh, Big Brandy Wine wants to take a look at SPY. Okay, I don't know why. All right, I'm going to say no right off the top. 2 reasons. Number 1, I don't buy anything over $300. This is 681. Look at the top. Let's zoom into that top real quick. Well, that's a little bit. Okay. Okay. Big Brandy Wine. What do you think? Okay, here's your bottom, 664. Shoots up, pulls back, shoots up, 692. Now you got 1, 2, 3 days coming down. So I don't like grabbing a dropping knife. If knife's dropping, I don't want to grab it. Now, if that makes any sense. But it's coming down at the moment. I don't want to do that one. Nike long-term. Scarlet, IWM. What is that? IWM. iShares Russell 2000 ETF. Those are dailies. I don't know if I want to do dailies. But, same thing. Looks almost just like the SPY. Up, down, up, down. It's coming down at the moment. Why would I want to do that? It doesn't make any sense to me. $246. Not even paying 1% for a cash secured put. St. Samuel, yes, we did take a look at Newmont. AI Finance, how are you tonight? RWT, dividend play. RWT. Redwood TR REIT. No. Okay, I don't do monthlies. Okay, January, February, April, July, October. Those are monthlies. No. Nope. Daily memes. How are you today? Cesar Rivera, ¿qué pasa, amigo? What do you think QDTE for long-term cash flow? QDTE. I don't do monthlies, okay? Now, what I'm doing is I'm showing you weekly cash flow, okay? QDTE is monthly. I don't do monthlies. Options user 5724 wants to take a look at UNH, University of New Hampshire. Here's your top at 600. Here's your bottom at 230. Now we're at 330. Up, down, up. Just kind of going sideways for the last couple of weeks. Take a look at that. Okay? Down. It's just basically going sideways. Not really doing very much of anything. So why would I want to do that? Anyway, let's zoom in a little closer. Last 30 days. Okay. Up, down, up, down. Well, it does look like it's going up if you like UNH. Okay, right now it's at 330. The 330s are going for 540, 545, which is over 1.5%. If you like UNH. It's always come back down to that. Do you like UNH? Can you see yourself investing your money into UNH? Okay, that's one of those questions you're going to come up with. Page, MU, isn't that Micron? No, Page. Why would I want to buy something at the high of the year? That makes no sense to me whatsoever. Now, don't get me wrong. I've invested in this before. Okay? She goes up, down, up, down, up, down, up, down, up, down. I look for opportunities to make money. Buying at the high is not an opportunity for me. Okay? She was here. Okay? Now she's coming down. Sweet Dan, how are you today? Fuga, thank you for that. That's a weekly stock. Yeah, that's all I do. YSPY. EXO stock symbol should go up. ESKO. 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 ESCO mini, blah, 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 blah. What the hell is that? That's not even a U.S. stock. ESKO, yeah, I spelled it right. Mr. Cowboy, good evening. I tried to get on, but the Wi-Fi at work sucks. Alrighty, Mr. Keith. Chris, which one is good for next week? Which one what? Merv wants to take a look at Dell. I love Dell. I do. And here it goes. Dell. Here's the top. Here's the bottom. Drops, shoots up, drops, shoots up, drops, shoots up, drops again. She is coming down right now. 125.88. 126 is going for over 2% if you like Dell. Where do you think Dell's going to go next? How about, Luke wants to take a look at Kimberly-Clark. Luke, I'll get there in a second. So look at the last 3 months from Dell. The last 3 months. Okay, here's the top, bottom, up, down, up, down, up, down. So it's coming down at the moment. So not yet. I mean, I'd give it another week or two before jumping into Dell, if you really like it. Okay, now I love Dell, I do. I have no problem taking a look at it every week. Justin wants to take a look at Plug. What the hell is Plug? Plug Power. Okay, I'm going to say no to Plug Power right off the top, Justin. The reason why. 0, 0. It's like it did not. offering me any money on these options. If I buy the stock and I try to sell an option, I'm getting 1 penny or I'm getting nothing. Yeah, no, not enough money there. Sorry. What time frame is your screen? Paige, how are you today? Ben, how are you? MSTR, hell no. What the hell is NTNX? Justin, MSTR doesn't have, all right, hold on a second. I'll do it. MSTR, you asked, I'll do it. Okay. Now, explain to me, Justin, why am I looking at something that was at 450, now it's at 150? It went from 450 down to 150. Where is the value in this company? Number one, I wait for the bottom to show up because it keeps going down, down, down. What are the actual assets this company has? Does it have anything up its sleeves to substantiate its $150 per share value or current price? Is it actually worth 150 bucks? I don't know. It's not something I ever invest in because it doesn't have any dividends. La 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 la. Mara, SMR, SMH. What is SMH? SMH. Vanik Semiconductor ETF. No, I don't buy it to high. Look at it. Okay. Now it's coming down, and it's above 300 bucks. 360 to 360 is going for 570, just shy of 2% if you like this company. Well, I've never heard of them, so I don't buy companies that I've never heard of, number one. Number two, if this company actually had 2 decades of increased profits, I would know, because that's basically what I do, buy companies that have. So I've been doing it for a while. I've never heard of this company. All right, Justin, I'm not 100% sure that would fit in what I'm looking for. Bad cash burn, okay. You're a millionaire and still teaching with zeal. Thank you, Moses. Paige, thank you, you're welcome. Find Sal. Nutanix. Okay, no. I have puts on MSTR. Okay. SMH, we looked at SMH. Riley, good evening. What was that? Thoughts on SPY? Okay, Justin, let's take a look at SPY, and then you tell me if this is something that you would like. SPY. Now, Justin, you like SPY? Okay, I'm going to come over here and look up historical data for SPY, because at this moment in time, Justin, we're looking at the statistics for SPY. The yield for SPY is 1% for the year. 1.06% yield. Why am I investing in something that's $680 to get a 1% per year yield? Why am I doing that, Justin? Hold on. The expense ratio is okay. Okay, so let's go back and take a look at the historical data, and I'll give you another reason why I don't like it. Historical data is basically you ever see the movie The Matrix? You have all these lines, the data stream. That's where all the data is. Okay, so I want to look at the data on SPY. Okay, SPY right there. Current price, 681. Historical prices. I want to actually see the numbers, because I got two choices. Choice number one, I can go in and read 20 years worth of quarterly reports and annual reports. Or I could take the lazy route and just take a look at the dividends. Because a dividend is a portion of the company's profits that they get. We are the investors. We buy, we sell. We own a portion of the company. We are entitled to a portion of the profits. So let's take a look at SPY's profits and see if they've increased every single year last 2 decades. Because my criteria for me to invest my money, 2 decades of increased profits and options. There's only about 300 companies that actually fit that. But SPY is not one of them. Let me show you. Historical prices, dividends only, and I want to take a look at the maximum amount. I will look at all of them. Okay, now we're going to look at 20, Justin, 2 decades, 20 years of dividends and see, are they consistently increasing or are they doing what most things, up, down, up, down? Okay, let's find out. 20 years ago would be 2006. Here we go. The very first dividend, 2006, March 17th, 51.9. Okay, 51.9, 55, 57, 79. That looks pretty good so far. 55. Wait a minute, it went from 79 to 55. Justin, that's not increasing, that's decreasing, which means as a person who is, about to get ready to pay, about to get ready to collect Social Security, my money is invested in this. Now you're saying my profits are going backwards? Why the hell would I put my money into something that's going backwards? It doesn't make sense. But hold on. It actually gets worse. It does. All right. We're going to try to make this a little quicker. 55, 65, higher, 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 lower. Higher, 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 lower, 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 higher. Do you see what's happening here? It goes up, it goes down. And it goes up, it goes down. I want a company that is consistently profitable year after year after year. And don't tell me they don't exist, because they do. Let's take a quick look at this one, okay? Microsoft Corporation, MSFT, okay? Go all the way back to 2006. February 15, 2006, 9 cents. 9, that's it, 9. 2007, 10, 2008, 11, 2009, 13, 2010, 16, 2011, 20, 2012, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83, 91. Did you notice, Justin, every single year that number went higher and higher and higher? That, in my humble opinion, is consistency of profitability. That's what I'm looking for. Companies that are consistently profitable year after year after year. Shake my head. No. How many like for this video? I have no idea. Hims and hers. Okay, want to take a look. Hold on a second. Hims. Someone wants to take a look at Hims. So, to make a long story short, Justin, no to SPY. Kind of took the long road, didn't I? No. No to SPY. Next on the list. Weekly dividends often come up higher risk, only for those who don't understand them. Uh-oh. Eric, QBTS. What is that, Eric? QBTS. Qberts, huh? Oh, D-Wave. Interesting. Okay, the top, the bottom, where was it? Where is it? Look at this. Sideways, up, down, up, down. 26.15, the 26s go for 148. That's a big number. But what does this company do? I've never heard of them. The last 3 months. Top, bottom, is, up, down, up, down. Okay. It's coming down at the moment. So do I like this? Do you like this? Never, rule 1, never buy something you don't understand or you don't like. It's not a company. Yeah, private account. I know the SPY is not a company, but here's the thing. It costs you $680 for each share you own. And for each share you own, if it is profitable, they give you a portion of the profits. It may not have employees sweeping the floor, mopping the toilets or whatever, but it's still an entity in which you invest and they give you a portion of the profits. Basically the same thing. Yeah, I know what the SPY is. You don't need to try to educate me. But I do appreciate your thoughts, though. Next. BMY. Megan Marie. BMY. Bristol Myers Squibb. BMY. Ouch. Not this week. Now, don't get me wrong. Bristol Myers Squibb is a great company. They've been around for quite a bit. But here's your top, here's your bottom. Look at this. Up, down, sideways, up, down. It's actually coming down at this moment in time. Okay? Down, up, down. Same thing. So don't get me wrong. I like Bristol Myers Squibb, but not this week because she's coming down. Here's your top. She goes from 43 to 55. So 43 to 55 is $12. That's a 30% increase from here to there. Of course there's going to be profit taking. RoboTrite, thank you for that. SMX. What is SMX? Hell no. The hell? That's funny. Yeah. Pedro, how are you today? KB. What is KB? KB Finance Group. No. Pedro, I don't do monthlies. Okay, they're options that trade only once a month, which means I'm only getting 12 to 24% a year. Why would I want to do that? Think about it. Okay, this company, KB, has options January, February, March, June, once a month. So if I'm averaging 1 to 2% every option play that I do, because that's my strategy, that's what I'm looking for. Okay, once a month, that's 12 times a year. That's 12 to 24%. Now, there's nothing wrong with 12 or 24% if that's what you like. But I want 1% a week, which I cannot get with a company that has monthly options unless I want to sit in front of the computer and stare at that thing all day. Yeah, no, I'm not doing that anymore. Sorry. So KB, no. Troy, INCM, monthly dividend payment. Uh-oh, it just disappeared. I was just looking at it. Okay, Troy. Okay, INCM, monthly dividend payment. I have 30,000 in it. Okay, don't know why. INCM. Franklin Income Focus ETF. Well, good luck with that. It has no options. Why am I looking at it? And look here. The top was last week. Now she's coming down. She went from, the bottom in April at 24, she jumped up to 28. That's horrible. From 24 to 28, and it took, what, 9 months to go up $4? Sorry, I have no idea what the company does. No options, no thank you. Okay, I do weekly options. One of my rules, Rule 4, weekly options only. So, no to this one. QBTS. Eric, we already did Nike earlier. Internet computer. Okay, internet computer coin. It's crypto. Oh, no crypto. Thank you. Nope, I don't do crypto. Okay, what else do we have? Joel, member V110. I have no idea what that means. Okay, Joel wants to take a look at Verizon. Hold on. Uh-oh. Wait, where were we? Oh, there you go. Joel wants to take a look at Coca-Cola. Now, I don't normally do Coca-Cola. The reason why I don't do Coca-Cola, the current price, $69.91. The closest strike price would be the 70. And it's going for 47 cents. Don't get me wrong, if you like Coca-Cola, it's almost a guaranteed, 20% or 26% per year if you like Coca-Cola. And so it's what it's always going to come down to. What do you like? Where do you feel your money is best safe? Okay, that's what it comes down to. All right, so no to Coca-Cola. FXAI, what is that? FXAI. X. FXAIX. Hell no. No dividend. No. Cheddar, 1976. TSLA. Now, a lot of people like Tesla. Explain to me why we're looking at it. Okay? 30 days ago, we're here, shoots up, now it's pulling back. Unless you know something that we don't know, it has no dividends, so it's very challenging to figure out where does it usually move? When does it usually move? Well, the reason why we like dividend stocks is they're predictable and they're consistent. And they do the same things year after. Uh-oh, my tea's gone. Tea's gone, so I'm down to, I don't know what this stuff is. Oh, okay. So she's definitely coming down at the moment. So if it has no dividends, how do we know when it's going to move? Because most dividend stocks go up in price just before the dividend is paid, because people want to collect that premium or that dividend. Anyway, next. Coles. K-Van. We haven't looked at Coles in a while. I don't even think I have any Coles, which is kind of weird. That's why I don't have any Coles. Yeah, I'm waiting for this baby to keep coming down, back down to this area down here. Okay. Here's the high, the low. Where was it? Where is it? Down, up, down. So now it's coming down. Well, I'm going to wait until this gap here fills before I jump in. You're welcome, Justin. Riley, Coles. Yeah, we're looking at Coles now. Look at it. It doesn't look that appetizing. What the last 30 days look like. Okay, here's the last 30 days. Top, the bottom, up, down, up, down, up, down. Hasn't found a bottom yet. So as soon as we find the bottom on Coles, then maybe. But at this moment, nope, K-Van's not even on the radar yet, because it's dropping, 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 dropping. As soon as she finds the bottom, maybe next week, I'll tell you what, we'll take a peek at it next week to see if she finds that new bottom. And it's already on the list for next week. Isn't that weird? It's already on the list for next week. All right, Playboy, thank you. Okay, Amin, we have already looked at MU. Samson Print Shop. ON Semiconductor. Is ON actually a stock? There it is. Interesting. Never heard of them, but okay. Top, bottom, where was it? Where is it? Look, it's down, up, down, sideways, down, up, down. 54.15. The 54s are going for 155. Well, let's zoom in. Take a look. Zoom in. Take a look. Here's your top, the bottom. Where was it? Where is it? Down, up, sideways. And it's actually coming down at the moment. So I can't really talk eloquently about this one or not because I have no idea who they are. I have no idea what they do. But I do know one thing. If this thing had 25 years of increased profits, I'd know exactly who they are. But I don't. We're going to look at MU. Joel. Oh, Miss Christie, that's so nice of you. Okay. Miss Keen. Ari, I have no idea. Eli Lilly. Explain your thoughts on Nike. Hold on a second. E-L-I. No, E-L-Y. Sorry, E-L-Y. That ain't it either, damn it. Nike. Explain my thoughts on Nike. See if I can explain. I'm not quite sure how to explain it any differently than I have already explained it. Okay, who came up with this one? Connor. All right, Connor. Besides the basics, Connor. Top, the bottom, where was it? Where is it? Look at the motion. Okay, the motion is what the motion is. Now you have the top here and the bottom here. Well, let's get past that and get to the last 90 days. Give us an idea of what we think, if there's a pattern or not. Here's the top. Big drop here. Here's the bounce off that bottom. Well, how often does a bounce happen after a big drop? Almost all the time. You get a big drop, and then you have a bounce, and then it goes up. How high do you think it's going to go before people, because remember, you're not the only dancer on this dance floor. You like Nike, great. You're not the only one. As a matter of fact, 35 million shares traded on Friday. That's a lot. So if the bottom's right there after a big drop and the bounce, well, yeah. But how high will that bounce go before people start taking profits? Well, let's zoom into that. Okay, so it goes from 65 down to 59. And then it keeps on dropping to 57. Now, 57 is the new bottom right there. Now the bounce. There it goes. From 57 to 64. Okay? 57 to 64 is $7. $7 on a $57 stock is over 12%. So that from here to there is a 12% move. So where do you want to jump out? But remember, wherever you want to jump out, that's you. You got other people at the other end. Me, I'll jump out at 1 or 2% because I don't want to hold anything. I want to get in. I want to take advantages of situations like that. Nike drops and she bounces up. Great. There's the bounce. Okay, 1, 2, 3. That's where I jump in right there. Okay, I don't, you can look at every single one of my videos. Never once will you say, yeah, get a hair at the bottom. No, I've never once, ever picked a bottom. And I've never sold at a top. Okay, bottom, isolated, 2 days. It proven to me that, yep, 2 days is up. Third day, I will jump in. Then I will jump out at 1 or 2%. because that's all I'm looking for. And you have no idea how many times this happens every single week, week after week after week. Okay, I only look at 300 companies, but I don't look at them all at the same time. Because you take all those 300 companies, the dividend kings, the aristocrats, the champions, the contenders, Warren Buffett's list, that's 300 companies. You take those 300, you throw them into the calendar, and the calendar will tell me when these companies are getting ready to pay a dividend. Okay? January. Okay? What do we have? General Electric, Micron, John Deere, Nucor, MDLZ, US Bank, Illinois Toolworks, Cisco, American Express, Bristol Myers Squibb, Cardinal Health, Cisco, and NTAP, all this week. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. 16 companies just on this one list. 16 companies that are consistently profitable for the last quarter of a century. I get 2 criteria and only 2. Consistency of profitability. Okay, every single one of these companies have been consistently profitable for more than a quarter of a century. They make my list. And weekly options. I can pretty much say 99 or 98% of these all have weekly options. Okay? I know that Cisco does not have weekly options, but it's still on that list. Anyway, but think about it. If a stock is predictable and it goes up just before it pays the dividend, because that's what that is right there. Oh, all right, hold on a second. I didn't explain this, so let me explain this. This is an EX dividend calendar. It's just like every other calendar, except for this one tracks companies getting ready to pay a dividend. Why is that important? It's a good question, isn't it? Well, most of these companies, Clorox, Comcast, Apache, Abbott Labs, Pfizer, Signet, CAG. Oh, Conagra, Caterpillar, AT&T, Verizon. All those companies have a tendency to go up in value just before they pay their dividend. There's 4 dates to remember. Date number 1, it's called the announcement date. That's when the spokesman comes out and says, "Hey everybody, my name is James, this is Dividend Stock Talk. We've made so much money this year, you'll be so amazed, and you're going to get yours on this date." It's the announcement date. It's when they tell you how wonderful they did or how bad they did and how they're going to share the profit. It's the announcement date. That's it. That's all it is. The second date, that's the most important one. It's called the EX dividend date. That is the last day the stock trades before the dividend is paid. So if you want the dividend, you got to buy it before that EX date. And that, my friends, is all these little green dots. Okay? All these little green dots represents companies getting ready to pay a dividend. So buy it. Me, I buy it 2 weeks before. Okay? 1, 2, on a Monday. So when I do my covered call on Apache, if I do a covered call on Apache, I'm buying it on the 5th. If it hits my target by the 9th, which is Friday, I get all my money back, plus I get to keep that premium, which is what I'm looking for. If it doesn't hit my target on Friday, I keep that money and I do another covered call on Monday, the 12th. And I collect that premium until the 16th, which is Friday. If it hits my target, I get all my money back. If not, I go to the 19th, which is my birthday. I go to the 19th, and I do it all over again. So I got one premium, and the dividend. And I will do it every single week until I hit my target. It's actually that simple, until I hit my target. Okay? So next, I think I got into a dividend trap with SMCY. Had a good weekly dividend, but bought at 15. Justin! Okay, number one, SMCY not on my list because they're not consistently profitable. So I wouldn't have bought it. Anyway, let me see what I can do. SMCY. Oh, shit. Two things. Number one, they're not profitable. Okay, hold on. SMCY. Okay, now, I'm not going to pick on you too much, Justin. I feel a little bad for you. Yield Max MSCI Option Income Strategy, SMCY. Okay, so dividends, here we go. Okay, now, Justin, did you even look at the numbers for SMCY? The very first dividend they paid was in October 2024. This thing's barely 2 years old. It's like giving your keys to your brand new car to someone who doesn't have a license, a 2 or 3 year old. Why? Okay, anyway. Okay, let's take a look at the numbers, Justin. Let's just take a look at the numbers. The very first dividend, $5.35. Awesome. $5.35. The second dividend, $2.20. Justin, that is more than a 50% drop. Now, my assumption would be you're not retired. Because if you were retired, you wouldn't be doing something like this. You take a look at a company, very first dividend is impressive. Very second one, they reduced it by 50%. 50%. That's like getting paid. All right, you put your 40 hours in, great, wonderful, you get 100 grand. Well, you put your 40 hours in, great, wonderful, you get 50 grand. Something just ain't right there. Okay? They cut the dividend by 50%. Okay. 535. 220. Down. 235. It's up a little bit. 172. Down. 209 up. 197 down. 150 down. 141 down. That's down 3 in a row. Hold on. I'm assuming it gets worse. 150, 141, down, 158, higher, 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 lower, 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 higher, higher, lower, lower. Do you even look at the numbers? Okay, number one, numbers are horrible. Number two, it's not even 2 years old yet. Number three, it's a monthly option. I don't do monthly options, the numbers are horrible. Just don't work for me. Number four, this thing's just dropping like a rock and does not seem to want to. It's like it fell into the bottomless pit because it keeps going down, 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 down. Unless you really like this thing. I mean, really like it. You might have to do a dollar cost average in order to be able to get out of this thing. Let's see what the dividends even look. I mean, the premiums even look like. Okay, 16 January. It's currently at 8.11. The 8s are going for 0. Did you even see these numbers? Holy shit, they're horrible. February. 9. No. Dude, I can't help you out. That is... I'm at a loss for words, dude. Number one, it's a monthly. I don't do monthlies. Number 2, the premiums are absolutely horrible. Number 3, it's dropping like a rock. Number 4, it's a year and a half. Okay, never mind. Going to the next one. Next. All right. Miss Christie, thank you for that. Eric, how are you doing? MB Barbaro. Okay, true. I understand that is even with me being in selling a call at the money is not 1%. Okay, kind of all over the place. Who is the best broker? Don, it's going to depend on what it is you want to do. Do you want ease and simplicity? Do you want mobility? Do you want to trade? What do you want? That's a good question. What do you want to trade? Cisco Systems. Say Mac Bear. Cisco, CSCO or CS or SYY. Cisco, both of them the same. Honeydew District. Holy cow, we are at 10:56. We're running out of time. Let's see what other questions we got. Will Tesla stock price fall further? Don't know, don't care. The reason I say that, and I probably shouldn't, because I got to figure out a way to be able to trade Tesla, because there's no escaping it. I mean, in 500 years, I'm going to say, who's the first person to get to Mars? Elon Musk. Okay? So how do you get around that? You can't. Rare is a no, absolutely. All right, so what else do we got? Are Fidelity investments making money? It's always going to depend on what it is you want out of what you're doing, Renee. Okay? I don't do them only because I've been doing my own trading for 30 years. And Fidelity is more for those people who don't want to do it themselves. You throw it into an ETF, electronically traded funds. You're giving your money to a computer and they're doing it for you. K-Van, never got to play M. I have no idea what play M. Maybe soon, okay? Good luck and Happy New Year. Will copper rise in price this year? That's a good question. I don't trade commodities and futures, so I don't know. Justin, how can I get a list of your 300 companies? Justin, are you ready? Google. That's it. You go to Google. In there, Mace's. K-Van. We'll take a look at it tomorrow. It's almost 10 o'clock, almost 11 o'clock. So, Justin, you ready? Go to Google. In the search, you put in Dividend Kings List 2026. Dividend Aristocrats List 2026. Dividend Champions List 2026. Dividend Contenders List 2026. And Warren Buffett's List 2026. Just say no to yield max. I agree with you, up down trader. Because they're not doing it for you, they're doing it for someone else. That is freaking genius. Glad you like it. I've been trying to understand how this works for hours watching your videos. How could you not understand it? It was created for my 9-year-old daughter who got it in 15 minutes. Number one, never buy something you don't want to own long term. That's number one. Number two, never sell at a loss. Well, that kind of makes sense too. Number three, make sure the company is consistently profitable. That's one of the stupidest questions I've ever came up with. And I find it even weirder that I had to come up with it. Number four, weekly options only. And number five, make sure all the numbers work. What am I buying it for? What am I selling it at? What am I collecting? Do I like it at this price? Is this something I want to put my money into? They're all very simple questions. I don't know how to enunciate this word any better. Specifically, well, however you want to call it. It was specifically made for a 9-year-old little girl. Daddy, what are you doing? Can you teach me? That's what she said. So how do you teach a 9-year-old? Simple, safe, predictable, consistent, and no way for her to lose. The 5 rules are simple. Never buy something you don't want to own. If you don't understand it, don't buy it. Rule number 2, never sell at a loss. It just doesn't make any sense. Rule 3, make sure the company's profitable. That shouldn't even be a question. But unfortunately, it had to be. Number 4, weekly options only. And number 5, make sure all the numbers work before you do anything. It's not that difficult. If you don't understand the company, don't buy it. You don't want to own it and hold it for the rest of your life? Don't buy it. Oh, thank me for the rose. Thank you, thank you. First gift they've ever sent. Yay! Thank you very much. MB Bobro. Okay. Congrats. Oh, lit up with a mustache too. Yay! All right. Hat and mustache. Cool. Justin. So on SMCY, should I keep it since it's so low now? Dude, you're going to have to cut. You're going to have to scrape for every penny to try to get back to where you are with that thing. What's your go-to weekly? What's my go-to? Macy's, usually. I love Macy's. Okay? I have a bunch of them. Macy's is one. General Motors, Ford, Dell, Intel. I loved Walgreens. Last year, Walgreens and U.S. Steel, awesome. I made so much money with U.S. Steel and Walgreens last year. It was crazy. Pfizer. I'll have to take a look at Pfizer tomorrow. Costing out. Hey, you're still here. You've been here all night. Cool beans. 76 BMW. Thank you. I'm Bro, then I'm Cook. Yep. Thank you. Thanks for sharing your knowledge. Welcome. I'm here every night. Happy New Year. Thank you. MSFW. Okay, Soprano, Texas. We'll take a look at them tomorrow. Are penny stocks worth anything? Renee, I don't tell people what to invest in. If you find an interest in penny stocks, have at it. I did penny stocks many years ago. You got to be very leery of the pump and dump. Okay? And you may think you're following someone and say, oh, they're doing so well. He tells me this, tells me that. And they just pump it up, and all of a sudden, they pull the rug out from underneath you. They walk away with all the profits, and you're left holding something that ain't worth anything. All right. IBM tomorrow. All righty. Antonius, break down energy stocks considering this whole AI bubble thing like OKLO, NNI, etc. All right, we're going to have to do that tomorrow. We'll check it out. K-Van said Pfizer premiums are dismal. Ask me how I know. He must own it. Okay. Oh, it's cracking really bad now. You hear it? Yeah. So my tea's gone. That usually helps out. All right. That being said, you guys have a nice night, and we will do this all again Sunday. Yay. Do you off course all? Absolutely, I do. DM me your number, and I'll give you a buzz. Okay? Soprano? All right. So you guys have a nice night. We'll see you again tomorrow. Hey, Club Med Tom. Haven't seen you in a while, brother. And now, ooh, that sounds terrible. Catch you guys later. Hey, thanks a lot. Thanks for your help, brother. And now the end is near.